Great, thank you. Thank you. Microphone is off.
Sorry, for example, there's British pound, GBP, JPY, Euro, US dollar. Click on the red.
Munib, I think your mic is off again.
Yeah, my mic is working.
Yeah, now it is.
So I hope you know how I create list. You can just remember that list by the London session asset. So I can just go here. I can select as many lists I want. Red list is for the London pair only. Okay. So let's start. So okay. So these are the assets. Step number. So hello.
Yeah. Now I can hear you. Earlier I couldn't. Yeah. Maybe your mic was off. Step number 1.
Hello. Hello.
Yeah.
Yeah.
Munib, I
What
can
is
hear you.
the first step? Please don't switch off your mic.
Okay. Yeah. Done. I think the first step should be to establish a bias. To check the background. First step is to check the
Analyze background.
Mm.
And establish market bias. That's the first step for London Open. Step 2. Step 2. What's the step 2?
Establish bias.
Yeah, step 1.
Bias.
Okay, analyze background and establish bias. That's the first step. Okay, step 2.
Step 2 is to mark.
Okay, how will we analyze background?
Mark
Draw
highs and lows of Asian
Wyckoff structure. Okay. Establish bias would be step 2. You're right. Analyze background. Draw market structure, Wyckoff structure, plus
I think in background
highs and lows of Asian
Asian
session. Okay. The second step would be
bias. Establish bias.
Establish bias. Establish bias, and that would be how will we establish bias? By marking Wyckoff semantics. Okay.
Like accumulation or distribution. Yeah.
Yeah. Wyckoff symmetrics. Okay. And by marking Wyckoff symmetrics. Okay. And the third one, step 3. What would be the step 3?
Maybe move the lower time frame to look for Wyckoff entries.
Once we have established the bias, what would be the third step? I told you before.
I think we should wait for the test to occur and then enter.
Okay, first of all, step 1, this should be performed on 15 minutes time frame and refinement on 5 minutes time frame.
Okay.
5 minutes time frame. Okay, remember that this one is also same. 15 minutes time frame, refinement of 5 minutes time frame. Step 3 is wait for London Open and trade in the direction of bias. Okay, step 3. Okay, this is step 3. Wait for London Open. Step 4. What's the step 4 here?
Mohammed, step 3 is 15 minutes before London Open, right? Wait 15 minutes before.
Yeah,
London
wait.
Open?
You can you have to do this or wait. Yeah, you can wait 15 minutes. You can say that draw conclusion on bias. No, this one is not 15 minutes actually. Wait for London Open. This one should be done. Step 1 and step 2 should be performed 15 minutes before London Open. Okay, remember that. Step 1.
I think sometimes Puneet, I think sometimes it's difficult to establish bias before London Open because
yeah, no, we have to continuously do the refinement. I will give you an example how to do refinements. Okay, step 1 and step 2 should be performed 15 minutes before London Open. Okay,
all right.
I will tell you every entry techniques, everything will be I will tell you, like in this webinar we will cover basically the London session and then the New York session. Okay, both of them.
Okay,
now step 4. What is the step 4? The step 4 is entry criteria. Entry on 3 minutes time frame based on minor sign of weakness. Minor sign of weakness. If you don't know what are the minor sign of weakness, I will tell you again in this video. Okay, in this webinar. Minor sign of weakness. Okay, entry on 3 minutes on correct reference level. All right, so this is a step 4 step. Okay, step 5. Determine correct position size and place appropriate SL. Okay, lots.
Okay.
With SL and TP. What is the minimum? What is the minimum? What is the minimum risk reward to ratio? The minimum reward to risk ratio is 2R. 2R to 3R depending on the situation. Okay, 2R to 3R. This is so what I mean to say that if you only trade London Open, you can easily achieve 2R to 3R from day to day consistent basis. Okay, on a consistent basis. This is achievable. All right, so I will copy it again and on Control C. Delete
Can you
it.
also paste in the Zoom chat also, Mohammed? I will save it.
I will paste in the Word file. I will give you the Word file later on. Okay, so don't worry about it. Okay. All right, let me do it the bigger size, 14. Okay. Step 3, step 4, step 5. Okay. 5-step process. Okay. All right. So let's start it now. So my time zone is UTC plus 5. So my London opens at 12 o'clock Pakistan time. 12 o'clock, 12 p.m. So you have to do what is your UTC, whatever your UTC is. If your UTC, for example, how about your UTC, Sadruddin?
3 plus 3.
Plus
Istanbul.
3. Turkey, right?
Yeah, Turkey.
Istanbul, okay. Plus 3.
Yes.
So that should be around 10 p.m., 10 a.m.?
Yeah, 10 a.m.
10 a.m. Okay, all right. So you know when to come back, right? 15 minutes before means 9:45 a.m. You have to come back. Okay, all right. So 12 p.m. is the London Open. So we just highlight it. Now let's see the last one. Let's go to 15-minute time frame. Okay, the last London Open was here at 12 p.m. The Asian session starts at around 2 p.m. Around 2 p.m. This is the entire Asian session. You can see the time zone here. You can see it's 3. You can see 2. So basically after the New York close, the New York was closed right over here. Okay, the New York was closed right over here on this point. Okay, now you mark the New York close high or the Asian open high. This one is the high of Asian high. Okay, all right, because the New York was closed right over here at this point, and the Asian opens right over here. So the last high was this one, the highest high. So we can mark it as Asian high. Okay, all right. Asian high.
Yeah, got it.
All right. So once this is marked, we can also draw the Asian low. The Asian low was around here. Okay, because now as we go through it after, I mean UTC. Okay, before the London Open, the last low which you can see is over here. You can mark it as Asian low. All right.
Yes.
Now these Asian low and Asian high are the potential targets. They can be set as the take profit. Okay. Asian low. Do you understand? That's why I marked Asian high and Asian low. Okay. All right. Now, once you go there, now you draw the Wyckoff structure. What Wyckoff structure you are seeing? You start from here, from last Asian high. You see the previous market, the previous London, from the previous New York Open, which was an Asian high. The previous market of the Asian high was this one. Okay, the preceding market. Can you draw the structure over here? The Wyckoff structure. You can draw.
Yeah.
Now this one. Don't get confused. This is a shakeout. Okay, this is 1 bar shakeout, so we will not count it.
Yes.
You can take our next point over here, right? Okay, so this one low. So you mark the low, and okay, this is a swing low here, and this is the swing low over here, because this one was a shakeout, so I will not consider it as a low. Okay, it's a 1 bar shakeout, so this is going to be considered as a low, and we can draw the structure from here, from here to here. Okay, just extend it. All right, and now you clone it, draw the trend channel. Okay, and between this and this was this one. All right, now the intermediate high between this and this is actually this one, but you can just slightly adjust it, and you can make it as a second one, this one as a second low. If you just refine it further to make it more better, right? You can refine it more further. Wait, hold on. You can draw this one to this one. All right, I hope it makes sense now. Okay, and I clone it, and I drag it to the high of this one. So, but this was a shakeout, so I took this low. Okay, all right. Whenever I see a shakeout, I go for the next low. So these are the two swing lows. So this is the intermediate point between this swing low and this low. This is the intermediate high. All right. So our
Yes.
So, you know, this is a supply line and this is overbought line. I think you know about this. This is overbought line, OB line. Okay. All right. This is supply line. This is OB line, overbought line. And now what happens? Before we come here, we can see a shortening of the thrust right over here. You can see shortening of the thrust. The overbought was not achieved. The market was broken here, like the market structure was broken here. And then we can see this shortening of the thrust. 1, 2, 3, 4, 5. Shortening of the thrust. If you try to draw this first point, you can see the distance traveled from here to here was, first of all, if you want to know if this shortening of thrust or not, okay, you take this high to here, first high, and you take from here to here, second high. You can see that the distance was reduced. The distance of this arrow was less than this arrow. So obviously this is a shortening of the thrust. Okay, SOT. Now this is a point of interest. What we'll see, we have a overbought. We have an up thrust formed over here or overbought formed over here of the shortening of thrust. So this line over here is known as reverse use of trend line. I think you know it, RTL, reverse trend line.
RUTL.
Yeah, reverse trend line. RUTL or just say it RTL. I just call it as RTL, which is reverse trend line. Okay. Because reverse trend line, we are joining the highs. The market is in uptrend, but we are joining the highs to monitor. So RTL is used for this one is shortening of the thrust, obviously. SOT was formed over here. You can see a clear indication of SOT. Okay. And then we have a bearish. So from here, we determine what do we see? The background. The background before Asian high. Just write it down. Background before Asian high or Asian session was weak. Okay, or bearish. Weak. Background is weak. All right.
Signs of weakness.
Yeah. So this is we have a here. What do we have? I told you that this is known as when we see this SOT and you can observe one more thing. If you look closely over here, you can see increasing volume of here. So this whole area is a region of buying climax.
Yes.
This whole region. If you go to the 30-minute chart, you will clearly see that this is an area of buying climax. I will show you. Now you can see over here. This is an area of buying climax. Okay, testing of buying climax. All right. So this whole region is an area of buying climax. Agree? All right. And then this is the area of buying climax. So SOT, we can say SOT plus buying climax is achieved. So you know now our market, our background is established. Our background is weak. Now we know the background is weak. We have to go short. Okay. So our initial thought is short now. All right. So now what do we see here? We have Asian low, Asian. Now we have established the structure. All right. So now what else you can see? You start marking the, this is buying climax. If this is buying climax, what do you see here? This is AR.
Yeah.
This is AR. Okay, this one is a failed buying climax. As I told you, whenever we have failed buying climax, we call it what? What do we call it? We call it as PSY.
LPS.
PSY.
Preliminary supply.
Preliminary supply. So we have preliminary supply, we have buying climax, we have AR, we have secondary test. You can mark it here. Secondary test. Now you are seeing secondary test in a very unique way. What do you understand with these kind of like, what does it tell you about the secondary test? The secondary test is not in line with it. And now once we draw, we can draw a line here, over here as well. Okay, we can make it dotted. All right, we can make it dotted. Dash line, okay. So what do you see? What do you notice about the secondary structure? Oh, sorry, secondary test. Secondary test is forming a lower high.
Yeah.
Yes.
Okay, this is an indication of bearish sentiment, lower high. All right. Okay. Now, what do we see here? What is this? Once we broke this AR level, this ice level, this is a minor ice. We call it as M ice, minor ice. This minor ice, when this broke the minor ice, what do we see? This is a JAC, JAC. Now we are establishing the market bias now. Okay, now after you have established the background, what did I say? You have to determine the market bias. Okay, the market bias is what? What does it tell you? This is a
bearish.
Bearish. Okay, bias is bearish. So you just write it down.
Mohammed, JAC is also for break of ice also, and for
it's not JAC. It's not JAC. Sorry, I will correct it. JAC. No, bias is bearish. Okay, this is not JAC. This is actually FTI, falling through ice.
Falling through
FTI,
ice.
falling through ice. This is ice. All right. All right, falling through ice. All right. And now if you take a position over here, you will be like ruined here. Okay. Now let's see. What do we establish here? Okay. The second thing within this structure, what do we see? Sorry. Now you can say that at London Open, if you take the trade over here, you're gonna suffer a loss. The market went this way in your favor and then came down, so you will suffer a loss. You cannot take this, and you will say this is RBI. This is actually not RBI, because RBI should have a characteristic to follow, right? What kind of characteristic should RBI have? Can you tell me?
It should show a test of the reference level.
Okay, this RBI is having a. You see here we have a declining volume over here, the bearish volume, and we have increasing volume of bulls. So this RBI will definitely fail. Do you understand?
Right.
Okay. Now we go to the 5-minute time frame and we further redefine it. Okay. Now, wait, hold on. Hello. Okay.
Hello. Yes.
Give me 1 minute. I'm coming back. Okay. Just 1 minute. You just see.
Okay.
Hello, can you hear me? Hello.
Yeah.
Okay.
Yes.
Okay. All right. So in this chart, if we go to the 15-minute time frame here, what do you notice? And we can also draw the structure from here. Okay, a trend line. And if we clone it, what do we see
I think your
before?
account is frozen.
Yeah.
Sure. Said is frozen on your side too or no?
Mm-hmm. Hello.
No, I think he's having connection problem.
Munib, I think yeah, yes. Your voice is not coming. Munib.
Hello.
Mm-hmm. Yes.
Okay, so if this webinar
Yeah.
closes, I have to do it again. Okay, all right. I will reschedule
Yes.
it.
Okay.
Okay, all right. So
Mm.
Asian low. Okay, so what do we notice here? What do we notice? Now we have our major background. Our major background is was weak. Okay, and major bias is bearish. You know that. But our immediate, our short-term time frame background, like our intermediate background was what? What do we notice here before London Open? Oversold. Okay, oversold. Did agree?
Yeah.
Hello.
Yeah.
Okay, all right. Now our minor background is strong. Now we have a confusing information, too contradictory. But so how I will do it? Whenever I see this situation, arm is strong. Okay. So remember that buying climax, SOT, and overbought, oversold, SOT, these things will determine the background. Okay. Jump across the creek, falling through ice, these things will tell you about the background. Okay. Hello, I cannot hear you, Said.
Okay.
Yes.
Okay.
I can
Okay.
understand.
So all right. So now we go to the 5-minute time frame. We further refine it. What do we see here? Further refine it. You see oversold, and our London Open was here at this point. London Open was here at this point. Okay. Now we have an immediate. Now we have oversold in the background. So we cannot take a trade right over here on the London Open. So here we see what? What do we see here?
Overbought.
This is not overbought. This is jump across the creek. This is oversold. This is jump across the creek.
Okay.
JAC. JAC.
Right.
Okay. Because this is a demand line. Okay. This is oversold line. This is demand line. Okay. Across this demand line, what do we see? We have jump across the creek after London Open. And before London Open, what can we see? Well, we can see that the volumes are rising. Okay.
Right.
Volumes are rising. Here we have a steady volume. Okay. We have a steady volume, and then we have a rising volume. Okay. And then again, now once we see a jump across the creek, this establish our bias, we can enter a trade after the test of this. Okay. So either we can wait for this line. Now we have first test over here. This test was not on this jump across the creek line or this one. So we will draw this line over here. This will form as a minor spring line. Okay. So now you see this AR line, this AR line, which is the ice line. The ice line has jump across the creek, plus we have, what do we have here? Hello?
Yeah,
Yeah,
yes,
what do we
please.
have here? This is a hidden spring, right?
Yeah,
Hidden
spring.
spring.
If hidden
Yeah.
spring, yeah. If
Hidden
it has
spring, or you can call
some,
it as a minor spring as well. Okay. Now here,
okay, yes,
if we
yes,
move to the 3-minute chart, we can further refine it. Okay. Now this is what?
yes.
Okay. This is hidden spring. Okay. This is what? Now here we are.
Only, I think,
Mhm.
only I think you can you please remove this list because it is hindering the view. This list
This.
on the right hand side. Right hand side. You know the list on the right hand side, red list.
Okay.
Yes, yes. If you close this, then it will. Yeah, yeah. Now it's better,
Okay.
much better.
Now we have
Thank
jump across the creek, and then we have what? We have this one. If you compare that, we have small like moves here. Then this one is sudden spike in volume, closing on the of the lows. Okay, and we have next bar over here. So we can enter a trade safely from here. Although the risk to reward ratio would be less because this Asian high would be a target because this is Asian high, right? This one is
Yes.
Asian high. This would be a target. So we go over here. This gives us around 1.8 R. Okay, 1.8 R. And once you are in the trade, once you see that the trade is working in your favor, you can reduce your risk to this one. Okay, and then you achieve a target right over here. This is the Asian entry. Do you understand?
Yeah.
Any problem with that? Now, once we have an
Yes.
Asian high,
No
now we
problem.
cannot target more than Asian high because we have a major sign of weakness in the background. Asian high will be a TP, take profit. Okay. All right. And as we are going through our take profit, we can take another trade. Okay. Although this will be late, but this is a very, very close trade here. And we can just mark our highs like this. And if we see, if we see any shortening of the thrust. Okay, yeah, we do see a shortening of the thrust over here. Okay, we do see a shortening of the thrust over here. 1, 2, third shortening of the thrust. This is effort versus no result. And we can enter our trade right over here, the potential entry. Our high would be above this line, just slightly below this line. Okay, how about our low? We can go to the 15-minute time frame to determine where would be our low. We can take it as a very long entry trade. Okay, now you see we can go all the way to the Asian low. This is around 7.62 R trade. Or you can also exit right over here at this line, this ICE line, 3.92. Okay, on a 15-minute time frame. Now if you go to a 3-minute chart
Or you
again,
can,
yeah,
or you can take the partial exit. You know, the last time you told me,
yeah,
like
yeah,
75%
yeah.
and
You can
25%.
close 75% here, and then you can let rest of the position run. Okay, all right. And the second position here could be taken here. Okay, once we have the structure here, we break down this line, jump falling through ice. We came back here, retest it. Okay, retest this ice line again. If we draw this ice line here again, what do we see here?
Effort versus no result.
Effort versus no result, followed by again effort versus no result. 2 sign of weakness we can enter right over here. This is the effort versus no result right over here. Our stop loss would be the last high, which is this one. This one is the last high. This one. This one is the last high.
Can we say this effort versus no result is end of rising market bar?
Yeah, you can say this one.
Okay. Yeah.
Yeah, you can say.
Okay.
Okay.
The opposite of bag holding. Yeah.
Yeah. Okay. So this is effort versus no result, and then we can enter a position over here. So we have 2 trades here. 1, 2, and the third one was here. So what I mean to say that on London Open, you can easily achieve 2R. That's what you achieve, because here, if you extend here, now you say this one, you cannot enter your position right over here. Why? Because we do not have any reference point. These are the reference point. This one is JAC line. This one is a reference point, and the third reference point, it goes up here again, and it will create another reference line. This one. So you can also enter right over here, and if you want to go for more, like this is actually effort versus no result bar, right? So you can enter and low over here. Actually, you can enter right over here and take your profit to the high, and you will get around 3.17 on London entry. Okay, so I will suggest you to close at little bit below here to, so that your spreads and everything are taken into effect. Okay. Yeah. So basically you can also go for 2R. Okay. If you're comfortable with 2R, you can go for 2R.
You see, Mohammed, you see where I jump across the creek, back to the.
This one?
Back.
This is
back
jump across the
to-
creek. This is rally back to creek. Yes. Plus it is
Yeah.
also hidden spring. Okay. Effort
Yeah,
versus no
this one.
result. Yeah.
From this one, you can draw parallel line to the next low, to the lower high on the right side, and
This
draw a
one?
parallel line. Right, also.
This one?
From the spring, from the low of the spring,
This?
you can draw
Okay.
parallel line. The next one, this one. Yeah, the low, the
Okay.
low of that spring red bar.
Okay.
The next one. Sorry.
Okay.
Yeah, this one. This low, and then the next adjacent low to the right. You can draw a parallel line